Hello everyone, thank you so much for joining in. We are now ready to begin this session. Hello everyone and welcome back to another series, another session of Let's Get Technical. I am Kavita Agrawal and today in this Let's Get Technical series, we are discussing some of the stock ideas which were shared with our members and have performed extremely well. So as you might know, in the Let's Get Technical series, all I do is show you technical charts and help you see the analysis which I am doing on the charts. Now, technical analysis as a field can be pretty confusing and is widely misused. So the idea of this series is to help you become better if you aspire to become a technical analyst, or if you just want to use it or understand it better to improve your trading. So before we move on to the charts, I want to first show you the list of the stocks in which we have outperformed expectations, exceeded expectations. Now, this list comprises of stocks which have been closed and are ongoing right now. Alright, so in the interest of time, of course, we will not be going through all of these stocks, but as you can see, the stocks which you are seeing here, starting from Naukri, followed by MCX, followed by Indus Towers, you can also see how many days ago the stock idea was posted. For example, the stock idea Naukri was posted to my elite plan 97 days ago, and it has already moved 23.1% since the stock idea was posted. Similarly, other stocks have also moved. But over here, I don't want to draw your attention to the performance. I want you to think about the analysis which I'm going to show you on the charts. So for the purpose of this session, I have added the top 8 stocks to the watch list on my trading view, and now let's move on to the trading view charts and see what triggered me to give long positions in these stock ideas to members. Let's start with Naukri. Okay, so you can see I'm on the 15-minute time frame, but as you might already know, I always like to start from the largest time frame to get the broadest view. So let's first take a look at this weekly time frame and see what triggered a positive outcome or a positive analysis for positive recommendation for this stock. So here on the weekly time frame, we can see that the stock was in a big downtrend, and back in May 22, the stock had formed a low somewhere around 3300. Now this low was revisited again somewhere around March 23, around 10 months later. You can clearly see that the price did not make a new low, but at the same time, price was also exactly where the previous low of the price was. But when we look at the RSI, that is not the case. Now, when we look at the price action, some people may call this as a double bottom. However, if you call this a double bottom, then you have to wait for a breakout above the level of 4590 for a confirmation before you take a position. But because I use the momentum indicator, that is relative strength index, which is what is plotted here, it acts as a leading indicator of price change or change in price momentum. So here when I saw positive divergence, now what is a positive divergence? It is simply the formation of a higher high on the index or the indicator, that is RSI, versus a lower low or a similar low on the price. So here we can see that Naukri back in March 23 had formed nearly a similar low, whereas the RSI formed a higher low, indicating to us that the momentum was turning positive. So that was the first indication that strength might be returning. Another indication came from the volume profile. Now this is the weekly time frame, right? So we have to take the volume analysis with a pinch of salt, but the high level analysis shows us very clearly that after this long red candle that was formed with high volumes, the rest of the candles were firstly very short candles, small candles, and secondly the volume was also very low. So this is one good point to observe. However, this does not make the basis for a decision. A strong evidence that we have collected from the weekly time frame is the RSI positive divergence. Now I'm going to switch to one time frame lower, which is the daily time frame, and see what comes out of it. On the daily time frame as well, we can see that there was a strong positive divergence. This blue thick line that you're seeing, the slightly faded blue line, this is actually the 200 EMA of the weekly time frame. Just look at how it is acted here, and just see how it is visible on the daily time frame. So this will help you understand that it's the same moving average of the weekly time frame which I have used as a reflection on the daily time frame, so that I have visibility across different time frames indicators. It really helps in the analysis. Now on the daily time frame, the positive divergence that I just told you about on RSI is more pronounced. So this became an even more positive reason for me to give a stock idea. Now there are a couple things that I want to show you. First of all, this moving average, before this low was formed, this moving average was visible already when the stock started taking positions somewhere around here, because as you can see, the low of this RSI low coincides with, so this RSI low coincides with this low on the price, whereas this RSI low coincides with this low on the price. And you can clearly see that this is a lower low on the price versus this is a higher low on the price. So there already was a positive divergence. So that was one of the reasons why even back in October 27th October 2022, I was also very bullish on the stock. So now let's move on to one time frame lower. And so let me tell you firstly that as a swing trader, I always have to follow what my primary time frame says, and that what the primary time frame, which in my case as a swing trader is 75 minutes, that has to be backed by at least one time frame higher and at least one time frame lower. So what I mean by that, so if I want to trade in a stock, I need it to be at a good position to enter on the 75-minute time frame, and I need the 15-minute time frame as well as the daily time frame charts to agree with taking that trade setup. So I've already showed you weekly where it was positive on a broader level, right? So for swing trading, weekly time frame cannot help you make the decision, but it can help you identify whether there is positive direction coming in or not. And then we moved on to the daily, which showed us that yes, it is strong, but where is the entry point? So for the entry point, we look at the 75-minute time frame. So on the 75-minute time frame, like I said, here again there was a positive divergence on the stock. Okay, and more recently, if you see, it is already marked here also there was a positive divergence. Now the reason why I'm showing you all these multiple instances is that if you look at how much time has passed since the first time I gave the stock idea in Naukri versus today, it's only been 224 days. You can see it on this marking right here, 240 days approximately. So less than 1 year. And these yellow points are where the stock idea was ended because of either it achieved the target or it triggered a trailing stop loss. So if I calculate and show you that on the basis, if I show you the returns that were earned on the basis of these RSI divergences, the volume study, the price action analysis, and of course the moving averages also. I haven't spoken much about the moving averages here because honestly, at this stage in Naukri, the moving averages did not help out much, because if you see, there has been constant, like the moving averages in this one is total chaos. The only useful average in this has been the 200-day moving average, which has acted as a good potential target level for the stock idea. So when the stock idea was still way below the 200 EMA of the daily time frame, now this is the daily time frame 200 EMA, and you can see it on the 75-minute time frame also, because that is the way I have set it up. So here, as you can see, when the stock gave a positive divergence on 75-minute time frame, so at the end of October, it was giving positive divergence on weekly, on daily, as well as on 75-minute time frame. And if you look at the 15-minute time frame also, you will see the same phenomena happening there as well. So you can see that here also there was a massive positive divergence. So that was the reason why I gave a stock idea here at the end of October. And then the stock in just a matter of 2 weeks ended up achieving the target, which was around 15% on the stock, right? So when the stock came down again, I gave the same stock idea to my members, because our idea is to constantly churn capital, and the stock went all the way up to 12%. But since that was falling slightly short of the target, the trailing stop loss got triggered and we exited the stock. Now, because we exited the stock, we were able to protect the capital from a downside of 14% nearly. And then on March 19th, I was able to reinitiate the stock idea for the members. Now, what was the reason for me to reinitiate the stock idea over here? So the reason was very simple. If you see here, if you see here, I could see a slight RSI range shift happening. Now, what is RSI range shift? So when a stock is moving from bear momentum to bull momentum, the RSI basically changes its range. So for instance, here you can see that the RSI was barely going above the level of 70, but when it became bullish, it started crossing above the level of 80 also, and then it was very shy of coming below level of 30. But earlier, when it was in a bear trend, the stock was repeatedly breaching the level of 30 and going as low as 2022. So that is what I mean by RSI range shift, and it is actually the RSI divergences that I just told you about. These RSI divergences happen at the precipice of these RSI range shifts, right? So on the 15-minute time frame, they're usually a little misleading, but on the 75 and the daily time frame, they are much more clearer. So on this Naukri chart, basically, because the stock had already fallen significantly, and you can see this white green zone marking, right? So this white green zone basically marked this previous low on the Naukri chart. And why I need this green zone to mark the area? Because when I'm looking at time frames, lower time frames like 15 minutes, even if I zoom out entirely, like this is the maximum I can zoom out, right? I am not able to see that this is an important price zone. So basically, when I saw that the price was constantly turning up from the price zones, at these points, say here and here, I could deduce that it was a very good time to give a recommendation in this, and that is the reason why I gave the recommendation. Now, because I know that stocks have a tendency to formulate downward spikes in a phenomena called stop loss hunting, I was mindful of giving a big stop loss in this, and I also constantly followed up with the members on the stock idea. As of today, the stock idea remains open, and you can see that the stock idea right now is 23% up from the initiation. So in less than 1 year, in this stock idea Naukri, which has been in a bear trend, we've made over 15 plus 5, 20 plus 22. Around 43% returns in a bear trend stock using long only strategies with the help of technical analysis. Alright, so that was the analysis of Naukri. I hope you liked it. If you have any questions, now would be a good time to ask about this, and I can help you answer those questions as I move on with the analysis of the next stock. Let's just quickly take a look. Alright, so no relevant questions about this, so we will move on. Now let's talk about MCX. Now, if you are one of the older followers of my analysis, then you know that I gave MCX as a stock idea in one of these live sessions, and that was somewhere around here, somewhere around the first week of May. Now, after the analysis, the stock did go down around 5-6%. In fact, it even triggered the stop loss, which rested right here where you can see this yellow line. And however, the stock reversed very strongly, as you can see in the price. In the chart, it reversed strongly with strong volumes also. So what is the reason which indicated to me that the stock was close to a reversal before the reversal even happened? So for this, let's take a look at the weekly time frame. Now, here trend lines played a massive role. Let me just clean up this chart a little bit for your ease. So on the chart of MCX, the trend lines played a major role. So as you know, I like to clone my trend lines rather than just use any two random points to draw all the trend lines. So what I do, so here also what I did was I drew the maiden trend line using the past two lows. And back then this low was formed, that was around September 22, but this low had not formed until then. So using this trend line that was freshly drawn. I then cloned it to cover all other major points, as you can see on the chart. Now, once the trend lines were drawn, you can see the clear direction that the price is moving. In addition to the direction, if you take a look at this drawing on the chart, you can see this stock has a tendency to move in massive cycles, right? So there have been only 2 cycles since it started, since its first low back in 2013. However, on the basis of this, we can reliably, so on the basis of this projection itself, it felt like there was a very good opportunity brewing here. So this was the weekly time frame giving us a good direction to work with. Now we wanted to see whether the daily time frame was also resonating the same message, and whether there was an entry point available on the basis of the 75-minute chart, and then whether or not the 15-minute time frame was agreeing with the whole story. So after we saw that there had been a good bounce up, naturally entering here was not a question, because the risk reward ratio was not favorable at all. So I basically had to wait for the stock to come back down to the trend line. Now when I did the live session in the beginning of May, I had been following the stock for months at stretch, right? And when the stock came close to the trend line, I had to talk about it. So that is the reason why I first initiated the stock here. Now you can again see this faded out blue line. Let me remove this green bar. This faded out blue line. So this, you know what it is. It is the 200 EMA of the weekly time frame. The 200 EMA of the daily time frame is right here. It is basically closer to the prices on the daily chart. But this faded out thick blue line is a 200 EMA of the weekly time frame, and what we can see on the daily time frame is more clearly is that the price had already taken a massive support here. So when the stock idea was initiated for the first time in MCX, the price had already started to take support somewhere around there. However, momentarily there was a breach in the trend line and the EMA, and that is the reason why the stock idea was exited. But when the stock idea moved again strongly and gave such a massive volume boost, there was no reason to not enter the stock idea. Again, on the daily time frame also, if you see the RSI, so on the daily time frame, if you see the consolidation or the bottoming out had happened back in the beginning of March 22. So basically already a year back. And if you look at the RSI activity, we can clearly see that when this bounce had happened, RSI had already moved to the bull range. So we can see now we are seeing a stock which is coming out of a massive bottom, which was formed after a huge 44% decline in the stock, right? And we can also see in the daily time frame that the stock has a tendency to get into consolidation before giving massive reversals. So whether it is coming out of a bottom like this phase, let me take the pencil. So if you see here, when it came out of this bottom, it first gave a massive consolidation, then it went up, and then at the top it gave a big consolidation, okay, and then it came down. Now here again it gave a this one here, it gave a big consolidation, and it has just started to move up. Now when the stock has come down, it is obviously a very good time to take a long position in it. So that is the reason that when the uptrend finally started, we were immediately back into the stock. And now the stock continues to remain as one of the active ideas, and if you see the performance, it's been 18.3% up since it was initiated. Now I started accumulating the stock back in April 2006 and now have a sizable exposure in my client portfolios. But even for the members who had subscribed and started adding to the position, they actually didn't lose anything, and they've been holding the stock since the last week of May and are already holding more than 18% profits, of which 13% is guaranteed because they have updated their trailing stop losses, which I tell them regularly. Now, trailing stop loss is part of managing the position. Of course, all of us come across good stock ideas sometime or the later. The main problem is that we either fail to act on the good stock idea, or we end up getting out of it too soon. This is why managing stock ideas or stock positions is more important than getting into stocks. So this was the analysis of MCX. I will take a quick look at the comments and then we'll move on with the next talk. So we have Rastogi ji, and he's asking a relevant question. He's asking, on daily chart you use 20-day RSI. What about average? So on the daily time frame, this is the daily time frame RSI, and as you can see, I use the 20 period RSI. That is correct. So what about average? So I'm guessing you're asking about the moving averages. So firstly, I use only exponential moving averages, and there are 4 time frames which I primarily use. First is the 20 period, then the 50 period, then the 100 period, and the 200 period. Now these are the 4 main time frames. Why main? Because these are the time frames which actually help me in managing my trailing stop losses and my target levels when the stock is coming out of a bottom. And other than that, I also use the 5 EMA, which is actually mainly for the for Nifty index, and I also like to plot the 500 EMA, which also acts as a good support level when a stock is in a massive downtrend. But the main time frame, main period of exponential moving averages that I use is 20, 50, 100 and 200. And then I also get a reflection of one higher time frame of these moving averages on the lower time frame. So for instance, the weekly time frame moving averages are reflected on the daily time frame, especially the 200 EMA. On the 75-minute time frame, you will see that all these time frames that all these lines that you're seeing, these are actually reflections of the daily time frame. So on the 75-minute time frame, there is the daily time frame and the 75-minute time frame exponential moving averages. On the 15-minute time frame, I only have the 75 period EMAs, not the 15-minute period, not the 15-minute EMAs, because the 15-minute time frame is a very small time frame. Only the 20 EMA is used, and then this EMA is used, which is basically the 5 EMA of the 75 period time frame, which would be the 25 EMA on the 15-minute time frame, plotted on the basis of high and low. So the red line is the low and the green line is the high. Sorry, I know, too much to take on, but I'm trying to be as comprehensive. And of course, this is a recorded session, so if you think there was too much, feel free to just go back to the recorded session and review it. And of course, you can also join my Telegram channel to get in touch with me, and if you have any questions about technical analysis, averages, indicators, feel free to ask me. Let me do you one more favor. So this is my Telegram channel, and this is the link. I'm going to drop this in the comment section for whoever wants to connect with me and join my Telegram channel. All right. Let's move on to the next stock. Indus Towers. Oh, this stock, amazing. So this is another stock where we've already made profit twice. All right. So let me see. Don't see the first marking. Okay, here it is. Let's see. Alright, so Indus Towers. Now again, let's start with the highest time frame. Now on the chart of Indus Tower also, see, when you take the weekly view, you can see that the price is hovering close to a very important support zone. Why? Because last 2 times, so forget about this low for now. You can see on the chart that last 2 times the stock had come down to this level of around 140 and given a massive jump. So the first time it came, it gave a massive jump of 2.6x in around 2 years. The second time it gave around 1.3x in roughly roughly 2 years. Okay, so now when the stock came again here, I could smell that there was opportunity brewing. Not just this, again on the RSI, if you see this, by the way, is the 14 period RSI on the weekly time frame, you can clearly see that there was a positive divergence. All right, so now let's move on. Oh, one more thing. The first time that the RSI that the price fell massively and touched this below 140 level, the bounce back that happened on much higher volumes. So we have 3 positive observations on the weekly time frame, which gives us a direction. Now let's go to the daily time frame for more details. On the daily time frame, again, you can see that when the price approached, so see, once I had spotted the opportunity of the weekly time frame, the stock went to my watch list. Okay, so I have 3 or 4 different watch lists. So this went to the blue watch list, which I call the potential watch list. So because it was in the potential watch list and I was following it regularly, when the stock came back down to the level of 136, I could clearly see that there was a massive positive divergence on the daily time frame. Okay, now you might be thinking, how does the RSI know? How does it give a positive divergence almost every time the stock is about to turn? The answer is very simple. The RSI is nothing but a numerical indicators. All it does is it takes the momentum of the stock and compares it with the momentum of the time gone by. And what it does is that when the momentum is shifting, see, nothing ever changes very instantaneously. Every change takes time. All RSI does is it captures that ongoing change and shows it in a very graphical manner. All we have to do is know how to study that. And of course, just depending on RSI divergence is not enough. We need to collect other evidences from indicators like moving average, or you can use other indicators, other breadth or volume indicators as well. But you have to make sure that you're collecting multiple evidences and let the weight of evidences tell you which stock position to take in. Which stock position to take. So on the daily time frame, again we could see that sure, the volume here started rising when the stock price started going up, and then when the stock price started going down, the volume almost dried up, which means participation is coming in whenever the price goes up. And now the price is very low. I mean, this is literally the lowest price. So now, if even though the stock was in a massive downtrend, think about this, my risk reward ratio is so attractive. Everything is indicating towards an upside. So even if I had to take a risk, my risk was not more than 3, maybe 5% at max, but my upside was massive. So what I did was I initiated a stock position or a stock recommendation for my members when the stock was at around 137. This was in April 2nd week. Okay, now coming to the 75-minute time frame. Okay, so for some reason this drawing is not visible, but no problem. On the 75-minute time frame, again same story is repeating. We can see there was a massive positive divergence. And then if you look at the 15-minute time frame, here again we could see that the RSI range shift had already happened. Okay, so like you see here that the price here, see here, RSI is made a massive low. Okay, and then the price made a lower low here, but the RSI is very stable and comfortable above the level of 30. So this was a go for me. So I had my members take positions. I told them that, okay, Indus Tower on this day looks very good. Enter around the level of 137, use a buying range of 140 to 135 and start making your positions. And I gave them a target of somewhere around 184. Okay, I got a little optimistic. But when so few days later, what happened is that the stock shot up massively. So here, let's take you to the 3-minute time frame for a little bit more details in this. So here you can see that after the stock idea was given, the stock shot up massively around 5 to 6% in a matter of 2-3 days. Then again stock started giving 1% upside, and then the next day stock gave 7% upside. The next day stock was a little dull with 2-3% upside, and the next day again the stock gave a massive 11% upside. Okay, so what we did was, once the stock had come out of the woods, see, the idea of managing a position. So now I want to talk to you about managing position. Okay, how do you trail your stop losses once you take a position? So for instance, this is Indus Towers, and we can see that the stock was in a strong downtrend when we initiated the position. So when a stock is coming out of a downtrend, it takes a little more attempts to establish itself into a rally. So that is the reason why in a fresh position, it is not a very good idea to trail your stop loss very aggressively. Okay, let the stock prove itself, let it form a significant higher high, a higher high and a higher low before you start aggressively trailing your stop loss. So basically here, I could see that when I initiated the position, the last significant high was somewhere around the level of 144, which means if I had a stop loss at say 133, I had to wait for the stock to go above the level of 144 before I trailed my stop loss. Now, because the stock did actually go and touch the level of 144, if I had trailed my stop loss here, then I would have been stopped out much earlier and I would have missed a massive portion of my profits. So what happened here was I did not change the stop loss. All I did was I brought it back up to the recent low. I did not take it above the cost price, even though the price had moved 5-6% higher. Then the stock price came back down to the most recent support level, which was the extreme, just the previous low, which was around the level of 136, and then went back up. Now this time when the stock went back up and above level of 144 is when I changed my stop loss to slightly higher, and then I started trailing my stop loss. Now this was the tricky part. So here the stock gave a massive upside. Right now, in this massive upside, it did not achieve my target. However, it also took away the opportunity of making a good trailing stop loss. Basically, the next trailing stop loss that I had was a pretty big one, and as a result of that, we had to lose around 5-6% of unrealized profit. But even in the face of that, we did manage to make around 9% profit in the idea of Indus Tower in a matter of just 25 days. So in less than 1 month, 9% profits in the stock. Okay, so here I got a little greedy and we initiated the stock idea again, but here the stop loss got triggered, so we got stopped out. However, we initiated the stock idea again on 25th May because the stock had fallen, formed a bottom, given a positive divergence on the 15-minute time frame, and started to go up. Okay, so we initiated the stock idea here and we've been riding the stock idea ever since. Now, if you see, the stock idea is still active and it's been 20 days since it was given and the stock has moved up 17% almost. Okay, so less than 1 month, 17% profit. And overall, if you see, the stock is still technically downtrending because if you see on the daily time frame, it's not even above the 200 EMA. But because we are using multiple time frames, gauging the direction of the stock and taking position on the basis of sophisticated tools, how much profit have we been able to book here? Once 9% and now 20%. So 29% profits using long side only strategy, using cash segment investment only, no F&O here, in a stock which has been in downtrend, using purely technical analysis tools. All right. Okay. So this was Indus Tower. Now let's take a look at the comments quickly. All right. So after Rastogi ji, I don't see anyone asking any other questions. So Rastogi ji is asking about RSI average parameter. So there is only one parameter which goes into the RSI indicator, which is the relative strength index, which is the period. So for all time frames other than daily and weekly, I use 25 period. For daily time frame, I use 20 period. The reason is that I basically want to, so in every candle, I want to the price action of the last 1 month to get reflected. Now every month we have nearly 2 market holidays. That is why I take, instead of 22 trading days, which 5 into 4, like 5 days of trading into 4 weeks a month, minus 2, which is because in a month we have nearly 2 holidays, so 20-day moving average. And why 25 period on the 75-minute chart? Because 1 day comprises of 375 minutes. All right, and to get 5 neat complete candles on each day on the intraday chart, I need to use 75-minute time frame, because if I use a 60 minutes, then every day there is a residual 15-minute time frame left, 15-minute candle left, which can give the false impression of a doji. That's not right for a good chart analysis. And then on the 15-minute time frame also I use 25 period, because again 15 into 5 is 75. So basically every time I move one step down, I am getting into 5x more details of the price action. What this does is it starts training my brain. Now you will also notice one thing, that I never change the time frame of my charts. I change the chart. What do I mean by this? So firstly I use the premium version of TradingView. Okay, and in this TradingView I have the 6 window format, and every window is dedicated to a time frame. I never change this. Why? Because I also use drawings on my indicators. Now see, on the RSI, for instance, I've drawn this positive divergence. Okay, now if I change this to 15, look at this drawing. This means nothing. Okay, this is the reason why the chart period should not be changed. The whole chart should be switched every time we want to switch between different periods. Okay, so Mr. Rustogi, I hope that was helpful for you. If you like that, please do join my Telegram channel and connect with me. I like the questions that you're asking. They're very, very relevant to the session. Okay, let's move on to the next stock, which is Tech Mahindra. Now, this was a wonderful stock idea that I had given to my members, because again, this stock idea was caught right at the bottom here near the level of 1000. Okay, now why did I give the stock idea at 1000? The first reason was a trend line. There is an upward sloping trend line here, and the stock had been in sideways consolidation, as you can see. Okay, let me draw some green zones. So here you can see that the stock is in sideways consolidation kind of movement. Okay, so I can see the last two instances the price had come near the level of 1000, and see, 1000 is a very important psychological support. Okay, and here we could see a positive divergence forming. We can see RSI range shift has already happened in the stock, so it makes for a good entry point near the level of 1000, because even if we had to keep a stop loss, how big would a stop loss be? Let's see, it would be around 5 to 6%, but if we look at the upside, it was a good 15% upside. So that was the idea. Now, of course, when I wanted to take a position here, I gave the stock idea at around 1000 to my members, and then I maintained a stop loss of around just 3%, because I was not interested in a very big stop loss, because the upside here is nearly 15%, right? So that is the reason why we took this position here. Now, this position becomes a lot more obvious when we look at it on the 15-minute time frame, because you can see that a massive RSI positive divergence plus RSI range shift is clearly visible on the charts. So that's the reason why this position was taken. And this was a time when everybody was still, being very mean to the IT sector. But through EXP-Invest YouTube channel and Telegram channel, I've been saying that the IT sector is going to experience some positive churn, and my members were, able to take early positions before the churn even started in stocks like Tech Mahindra, Naukri, Emphasis. There are a few more IT names that we've booked pretty good profits in. So here, as you can see, the stock has given nearly 14% returns in less than 35 days. So this stock idea has actually been closed. I'm yet to put the marker. Oh, here it is. Here's the marker. So the target on the stock idea was achieved. So we managed to book around 11% profits in the stock idea in a matter of just 28 days. So I just showed you what were the key evidences which led to me identifying this stock as a good idea before the stock had even started unfolding into a rally. Okay, so I see that we've already reached 38 minutes, and this is where I will have to stop. Now, of course, before going away, I will take a quick look at your comments and help you out with your stock queries. We will continue this session and delve into the details. If you like this session, more next Wednesday. But if you did like this session, do indicate that in the comments, because if I don't get that positive response, then for next Wednesday, I will come up with some other topic. Okay. So is there other trigger to enter stock with RSI positive divergence? Mahesh ji, I'm not sure that I understand your question. What other? So, okay. So what you're calling trigger, I actually call evidence. So like I said, just RSI positive divergence is not enough to take fresh position. You need to collect bundles of evidences. So how is the volume reacting when the price is going up versus how is the volume reacting when the price is going down? We know that if a trend is experiencing higher volumes, the trend is going to continue. If a trend is experiencing lower volume, the trend is going to either stop or reverse. So if we see that on the days when the price is moving up, the volume is higher or increasing, we can deduce that the uptrend is catching momentum. And if the stock has been falling, okay, see, the stock has been in downtrend, but lately, even though the price is falling, the volume is not that good, which means the volume is not supporting. So participation is dying out whenever the price is now falling. So that indicates a reversal. Okay, so it's a little confusing, it takes some practice, but first thing is volume, second thing is moving averages. See, there is a concept of mean reversion that even on this Tech Mahindra chart, if you see, so see, the price has been in sideways consolidation here, right? But if you look at it, it's been mean reverting so well. This blue line, for instance, take this blue line, this is the 200-day exponential moving average, and if you see the price in the sideways consolidation, it's pretty much been suing itself around the 200-day exponential moving average. Now what happens when the stock starts trending very strongly? Then these moving averages become the support level. That is also mean reversion in a way, right? Because again, look at the blue line here. Okay, now you see this price goes up, comes back down to touch it, goes up, comes back down to touch the moving average, goes back up, comes back down. The difference in consolidation and trend is that during the trend, your moving averages also move, yet the prices come back down to touch it. So that is why when a stock has unleashed itself in a strong uptrend, using these moving averages as potential entry points is a very good idea for you. All right, and when a stock is moving in a consolidation zone or a sideways zone, then these moving averages basically like when the stock is significantly below and has given these mean reversion movements multiple times in the past, like 1 or 2 times, then it's a good idea to start using that. But again, just using moving averages is also not enough, so you need to use these indicators in tandem. See, a lot of people like to use 10-15 indicators, but in my opinion, you don't need to use so many indicators, because at the end of the day, every indicator is talking about the same common denominator, which is the price. It's okay to use 2-3 different indicators to just make sure that they are all saying the same thing. But when you're using too many indicators, you're basically asking the same thing being told to you in many different languages. It doesn't make any sense. It's also not required, plus it's also not very efficient. So I find using these very common tools in combination with price action is more than sufficient for my analysis. Okay, so Mr. Bala Vignesh cannot find the link. Okay, so here I have shared my Kavita's Telegram channel again. Okay, Kavita's Telegram channel. So I have shared the link again. Feel free to just click that link. I mean, it's actually graying out, so it's kind of faint. So just look for the message from Kavita Agrawal, which is basically my name, and when you click it, you will be automatically redirected to the Telegram channel. Yeah, I do see that nobody's been able to join that. I don't know why. Just click on the link, or you can go on Telegram here, and then so basically you just need to go there and write @EXP-Invest in, and you'll be able to find my channel pretty easily. It's pretty simple. Okay, comments, let's see. Okay, we have Raghava is asking about Power Grid. He bought at 233. Should he stay or exit? 233 means you've bought it pretty recent. Okay, not that recently, and also your entry was pretty good in Power Grid. It's up 5.8%. Raghava, you have to use a trailing stop loss here, and your trailing stop loss can comfortably be at 241. I would suggest you continue to hold the stock, because the uptrend which is unfolding currently looks pretty strong. But just make sure that when the stock crosses above the level of 250, you check back with me for a fresh trailing stop loss level. Okay, Mahesh ji is asking about Finolex Industry, bought at 165. 165. Okay. Okay, very good momentum starting, supported by strong volumes. The RSI on the daily time frame just took support from 40 and turned. On the 75-minute time frame, RSI took support at 30 and turned, and there is a huge positive divergence. Mahesh ji, you should have told me also about this stock. Just kidding. So yeah, so the momentum is pretty strong, and the stock is looking pretty set to go higher. So I think you should continue to hold it for a comfortable target of around 190, 191, right? But you also of course need to use a trailing stop loss. Okay, So trailing stop loss here is a little tricky because, um, okay, s- um, all right. So I would suggest you use a trailing stop loss near the level of 169, 168, 169 के बीच का आप trailing stop loss use करिए. That is good. Okay, let's take a look at more comments. So we have a lot of hellos and highs. आप सबको hello and namaskar. Thank you so much for joining. Damn, San, you're asking about Bank Nifty going at minus today. I don't know why it is going minus today, but all I can tell you is that I've been pretty bearish on bank stocks since quite a while. So if you have banking positions, just be very cautious. Make sure that you're trailing them with stop losses and you're exiting the stocks when the stop losses are hit, because see, banks have given strong rally in the recent past already, and now it's time for other sectors like metal and IT and pharma and realty to come back in the churn, and media to come back in the churn. Okay. Let's see. So Sachin is asking about options. Sachin, I'm sorry, I'm not a options and futures expert. I only do swing trading in cash segment. That's my specialization, and I believe focusing in one sector where I have the capacity or the power in my hand to manage my risk does me much favor and allows me to sleep much more peacefully at night. So I'm sorry I cannot help you with your option query. All right, Neeraj, hello to you. Bhanu, hello. Can you please give idea for JBM Auto? JBM Auto Limited. Okay, JBM Auto. So, if you're looking for a fresh entry here, I would not suggest it. See, the simple motto is enter stocks before the rally, right? Here I can see there is a negative divergence on the 15-minute time frame. On the daily time frame, the stock is already rallied crazy. Even though there is, like there is indication that the momentum is going to continue, I will not suggest you to make a long position right now, because if I had to give you a stop loss, a trailing stop loss, it would not be lower than 15%. So that's a massive stop loss to follow. However, if you do want to take a position, just wait for the stock to come back down to like around 850-ish kind of level, because see, the market is also pretty high and pretty hot. So there has to be a correction, right? There is always a correction. So just wait for that before, and of course when the stock comes back down to 850, you need to get it reanalyzed before making a position. So do that, but do not ever buy a stock because it is already rallied, right? You're just giving the people who bought at the right time to sell you the stock which is out of steam now. Okay. Let's see. All right. Okay, Jayaramji is asking about Tata Steel. So again, Tata Steel has also given a massive rally, and it is not a good idea to enter the stock anymore. So like the portfolios that I managed, I've been long in Tata Steel for a while in them now, and these stocks I'm now in these portfolios I am now trailing Tata Steel very aggressively, but for a fresh position I would not suggest. Why? Because you can see on the 15-minute time frame, the RSI is now kind of not sustaining above the level of 70 for a very long period of time, which means that it's kind of getting tired. So you want to trail a stop loss, you don't want to make a fresh position at this point of time, because your risk reward ratio will be very unattractive. Okay, Rohit Bhardwaji, welcome again. Good afternoon to you too. So we have Gaurang ji. He's asking about LICI. All right. So I don't like the stock of LICI, to be honest. I don't trust it. And right now, I will suggest you to steer clear of it. The reason is that there is a RSI negative divergence on the 75-minute time frame. And see, the stock, ever since it's done an IPO, it's been moving downwards, right? I don't like that in stocks at all. It skews the charts. It does not help you make money. I was able to take a long position in the stock when it formed the first bottom and ride it all the way to the 17% profit in around 2.5 months. But after that, when I tried again, I ended up making around a 3 to 4% loss, and I was not happy with that. After that, but however, right now I don't think you should make a fresh position, because I think the stock can fall back down and either make a new low, which if it does would be a good 14-15% lower. But if yeah, I don't see any upside here on LIC, so I will suggest you to avoid it. If you have an active position, then exit it. Harsh is asking about Ambuja Cement. All right. Very good rally unfolding in Ambuja Cement from what I can see. Fresh entry again, not recommended at all. See the stock here, I had a note wait for breakout above 405, and the stock is already above 464. So fresh entry is not recommended, because the 15-minute time frame is saying that, boss, I'm tired, I want to take some rest, which means that it might fall. See, my target on the stock remains at the level of 525. However, the achievement of that target is not very guaranteed, because see here, if I have to give you a trailing stop loss for a fresh entry, it will be 10%, right? For a fresh entry, that would be the stop loss. However, if someone already has a position and which is already in profit, then you can go ahead and maintain a 4% stop loss at the level of 445. So Minakshi, I just answered LIC. I hope you were able to listen to that. Okay. There are more stock queries, but we are really out of time, so I'm going to have to call it quits. I'm just going to take one more question from Mahesh ji, because this question is really good. He's asking how to do analysis of a stock when it opens gap up or gap down, example CDSL today. So see, whether a stock is opening gap up or gap down, you can't do much about it. Okay, so in situations of a big gap on the charts, the best way to analyze it to step away. So don't look at the very small time frames, look at the larger time frames. Now see, firstly on the chart of CDSL, starting from the weekly time frame, what I can see that this is a mammoth stock. Okay, mammoth mover stock, which means that this stock doesn't go about in small trends, it takes big leaps. So the first rally that the stock gave was a massive 8x rally in a matter of around 3 years, right? And since then the stock has fallen down around 45% to take support incidentally at the 200 EMA, which is usually seen as a very important support in stocks which are taking a massive correction. Now the stock, as you can see from what I think is, the stock has started to form a bottom here, but not very successfully. So personally, I am not comfortable in taking a position in this stock just yet. I will wait for the stock to give me some more indications. Now here it did start giving like a positive divergence ish kind of movement here, but unfortunately this movement, see, this is why I was telling you not to take positions purely on the basis of RSI positive divergence. Okay, you can see here that a massive 75-minute RSI positive divergence emerged, but what happened? The price went up, took resistance at the 200 EMA, RSI went up, took resistance at the level of 60 and went back down. Okay, so here if you did not use a trailing stop loss, say you took the position just on the basis of the divergence, it becomes important to then actively manage the position, because if here you had not taken a stop loss or maintained a trailing stop loss, you would have lost easy 15% of your capital, which can be quite distressing, right? Now in this case the stock reversed, but in most cases we know by experience the stocks don't reverse, and that 15% grows to 20, 25, 30%, which can be crazy. Okay, you don't want to be in that position. Now let's come to the today's gap down. See, I honestly don't see anything very significant about this gap down, because the way the stock moves, this gap down is nothing on the larger scale of things. Okay, so when there is a gap down, you have to see whether it is pretty significant or not. Now for instance, there was Infosys, right? Now there was a big gap down when the Infosys earning results came out. Now the way Infosys moves, that was a matter of like, it was a very scary thing for a stock like Infosys to fall 10% in a single day, right? So over there, how the analysis was that basically if anybody wanted to make a long-term position, they were good to go, but for short-term the stock had become too volatile to do anything. Similarly on the chart of CDSL also, the chart right now is too volatile to make any decision. Like the 75-minute chart, for instance. Over here, I can see the RSI went down below 30 and then also went up above the level of 70. So there is no direction to the movements. It's just, going very haywire condition. So it's best not to pay attention to CDSL right now and avoid making any positions. You have to always focus. You should always focus on making positions in stocks where you can play to your strengths. So don't try to force trading setups against stocks. Take the trading setups which are most easily available, most understandable, and most easily manageable for you. Whew. So with this, we've come to the end of this session. I really apologize to people whose queries I couldn't answer. You're welcome to join my Telegram channel, and there is a chat group which is associated with the channel. You can post your queries there, and whenever I get time, I will make sure that I respond to you on the queries. Just make sure that you're posting one stock at a time. With this, I will take your leave. Thank you so much for your time, for watching. It means a lot to me. I will see you again on Friday with the Market Outlook series, where I discuss Nifty, Bank Nifty, intersector charts, and basic mood, the basic mood of the market, which sectors are coming into churn, which sectors are going out of churn, and why. So that's all. I will see you again on Friday. Take care and namaste.